let's start with Tesla Motors.
Sure.
Because one of the big stories last week was that Tesla unveiled the Model 3. This morning, they came out with some news on their first quarter deliveries. A little bit of a miss there, but let's go with the Model 3. And I think later today they're going to be updating how many pre-orders they've gotten. But the pre-order, as I understand it, is anyone can put down $1,000 and reserve their own Model 3. And as of the latest public number I saw, 276,000 people.
Not bad. So that's $276 million Tesla has this week that didn't have last week. So they're doing pretty well. That's some nice working capital that they can work with. But
now some of those people can cancel.
Right. It is refundable, fully refundable.
But for right now, that's a nice, like you said, that's a nice working capital to have.
Not bad, all in a week's work, No, with Tesla, the unveiling last week on March 31st, by all measures, this is a car that people want. Clearly, with that level of pre-orders, which is beyond what I think Elon Musk or Tesla themselves expected, clearly this is a car that people are very excited for, they want. So really, the way I look at it, the ball is in Tesla's court now. All the company has to do now is execute and deliver what they've promised they can do on time. So their schedule at this point is that they'll be able to start manufacturing, delivering these cars by the end of next year. So I think ideally, in a dream scenario, or in an ideal scenario, you'll have all these cars delivered to people, I'd say by the end of 2018 or early 2019. But as we know, with the Model X, the company has had, with their most recent vehicle, the company has had issues with manufacturing, delivery, production, getting things delivered and produced on time. The Model X was delayed about a year and a half. So I think if you saw something similar happen with the Model 3, when you have hundreds of thousands of people, probably close to 400,000 people at this point, it'll be interesting to see what the updated number is. If those people have to end up waiting, an extra year and a half, 2 years, then you'll probably start to see that refund rate tick up.
The Model 3 is for lack of a better term, the mainstream vehicle. This is the cheaper version. This is the $35,000 version.
Yeah, at the base level.
And I think if you're looking at this and you are maybe not skeptical, but I think, and you touched on this, I think it is fair to look at Tesla and their track record to date in terms of deliveries and say, come on, can you really do this? Because, as I said, they just this morning announced first quarter deliveries fell short of their own target.
Right.
And they were very forthcoming about why they missed that target. I think they were aiming for 16,000. They came in 14,000 and change, something like that. And among other things, they blamed their own hubris for how much tech they put in the SUV and all that sort of thing. And that's, I'm always a fan of that kind of candor. Mm-hmm. But I also, and this is not a stock I own, I also look at them and say, okay, so you guys, by your own admission, had trouble delivering 16,000 vehicles. Mm-hmm. And now you've got orders. Whatever the number ends up being later today, let's just assume it's north of 300,000.
Yeah, just for some perspective, last year the company delivered a little bit under 51,000 vehicles for the year. This year they're shooting for 80,000 to 90,000 vehicles. And even with the miss in the first quarter, they're saying we're still on track for 80 to 90,000 vehicles. But then when you have upwards probably 300,000 vehicles in pre-order, and that's not including, the Model S or Model X orders that they'll have and will need to fulfill in that time frame. So this is a company, there's a lot of consumer excitement, as we mentioned, but it really is now in the company's court to ramp up that production as quickly as they can while maintaining the quality and integrity of the product, which is obviously really important to the Tesla brand. So it will be a challenge, and this is a company that's still burning through a lot of cash. They're not making money, so they burned through $2.1 billion of cash in 2015. They really need the Model 3 vehicle. This has been what Elon Musk describes as the secret master plan for Tesla, where you start with the Roadster, a low-volume, high-priced car. Then you move to the Model S and now the Model X, which is mid-price, mid-volume cars. Then you move to a mass-market, high volume, lower price car with the Model 3. They need the Model 3 to work out. That has been the game plan all along. So if they can get there and produce and deliver these vehicles profitably and on time, I mean, things look really great for this company. But as we've seen with Model X, the track record is still a little shaky. But for now, the company is just in a great position with so much customer excitement. And you have to remember, this is a company that doesn't spend any money on marketing. So to have that level of excitement with no dollars being spent on marketing is really quite impressive.
Have they given any indication of? I'm thinking about, let's just for the sake of argument assume that it ends up being 400,000 pre-orders. Okay, just for the sake of this question, what percentage of people, and maybe they've indicated something along these lines, or maybe you have a number in your head, but what percentage of those people, if they come back later this year or sometime next year and say, you know what, I want my $1,000 back, I'm not waiting anymore. Is there a number that for you spells trouble? That is it 10%? Is it 20%? Do you have a number in your head where you go, you know what, this is definitely a red flag?
It's really hard to look at because Tesla is they're a unique enough company in their own right, but then they're also delivering directly to consumers. So they're not going through auto franchises or dealerships. So that's also something to take into account. But looking at some numbers just for what this could mean, just in terms of the pre-orders and what the implications are for the company in terms of cash. Let's assume that 70% of the people who have pre-ordered as of this latest number, so about 276,000 people, let's assume 70% of those people end up buying the car. And you can assume that with some of the add-ons and upgrades to the car, that the average selling price will probably be closer to $40,000 or $42,000. Those are some of the estimates that I've seen around, but obviously that's a moving target at this point. So going back to those numbers, so 70% of the people converting to buying the final product, average selling price of $42,000. That would represent more than $8 billion in sales just with those pre-orders, and that's more than double what the sales Tesla had last year in 2015. So even with those pre-orders at 276,000 is probably well higher by now. Those numbers are from a couple days ago. There is still a lot of potential with these pre-orders. But in my own head, I would think if more than 30% of those pre-orders end up not buying the car, that would probably be a red flag. But it's such a unique model. It's hard to really pinpoint the best way to look at this. But in my head, I think, if you get 70% of those people to actually become a Tesla buyer over the next couple of years, once the Model 3 is ready, hopefully on time, I would think that's a success for Tesla, because that's a massive increase in sales just with pre-orders.
We should mention the stock because it's up about 16% since last week when they unveiled the Model 3.
Yeah.
It's at its highest point since last fall. And you and I were talking before we started taping because it's up about 3% this morning. But before the market opened, the news broke about the miss on deliveries, and the stock was down about 3%. And you had the short sellers coming in there. And I'm not saying it's a slam dunk that this company is a success. But Elon Musk is on the short list of CEOs that I would never dream of shorting his stock.
Never.
Just because there's no he's crazy in a good way. And so I also think that this is a stock that, like, if you're trying to value, if you're in the automotive industry and you're looking at Ford Motor and GM and you're trying to apply the same way that you value those stocks to this company, I think that's just a huge mistake.
There's a lot going on behind the scenes with Tesla, and man, Elon Musk, just a brilliant entrepreneur, brilliant engineer. It's rare when you have those two qualities in someone. You have some examples through history. Like Steve Jobs is a great recent example. And Elon Musk, he still owns more than 22% of the company, so he has a lot of skin in the game with Tesla. But what's amazing about Tesla is to make this mass market Model 3 vehicle, they need to revolutionize the lithium ion battery industry. Like, you can't have these affordable electric cars without affordable mass produced lithium ion batteries. So Tesla is in the process of completing the Gigafactory in Nevada, which I didn't realize this, but in the Model 3 unveiling, Elon Musk mentioned that this, in terms of physical area, this is the largest building in the world. So I mean,
Wow.
really astonishing. And the battery production out of the Gigafactory, Tesla's Gigafactory in Nevada, will surpass the production of all other lithium-ion batteries in the world combined. So this is a massive factory, and this is just the first one. They're planning to build more, possibly in Japan or somewhere else. So Tesla has huge ambitions, and it shows on the cash flow statements. The company is just burning through cash. They're investing a lot in capital expenditures, building out these factories. But yeah, Elon Musk, he is similar to, I would say, Jeff Bezos or Steve Jobs, just a brilliant engineer, a very savvy entrepreneur. And man, he just has a vision, and he's disciplined and just determined to make that vision a reality.
I think there are going to be a lot of things interesting to watch related to this story over the next couple of years. And one of them, for me anyway, is how the other traditional automakers react. Because I've talked to a couple of people who work in the automotive industry who have said over the last couple of years, we're keeping our powder dry until they come out with a mass market vehicle, and then we're going to go after them. So it'll be interesting to see what form that takes and how that works out.
Absolutely.
At Market Foolery is our Twitter handle. From Tabo Hermanas in South Africa, who very nicely tweeted a story from The Economist entitled "Blinded by the Light," and the subtitle is "Two Big Potential Bankruptcies Cast a Shadow Over the Solar Landscape." We touched on one of these companies in a recent episode, and that's Sun Edison, and the other is Abengoa, which is a renewable and engineering firm in Spain. And I'm curious because I know the solar power industry is one that you watch, and as an industry, it's had a pretty nice run, I would say, for the last 5 to 10 years in terms of not just results, but growing acceptance. Certainly some of the stocks have had good runs. And I think that for whatever questions existed about the viability of solar power before, say, 2005, I think you'd be hard-pressed to find a lot of people saying, no, there's no viability. So I think that, solar power as a viable power option, as a viable way to invest, I think those questions have been answered. That said, when you look, I mean, these are two large companies that are, on the verge of just completely collapsing. And I'm wondering, when you look at a story like this, do you look at this and think, well, that's them, that's not the industry as a whole? Or do you think part of this story includes a cautionary tale for investors?
I think it's worth being cautious here. As we talked about with Tesla, similar to the story with Tesla, these are companies that are burning through cash and they have a good amount of debt. Anytime you have a scenario like that, there is higher risk for investors because these are companies, they're dependent on issuing stock, they're dependent on borrowing money to finance the business, and they're plowing through cash at a very rapid rate. So Sun Edison, as an example, their operating cash flow last year, over the past 12 months, negative $1.4 billion, capital expenditures of $3 billion. So that shows you they're burning almost $4.5 billion in cash each year. They have a net debt position of nearly $8 billion. So just taking a quick look at the balance sheet and the cash flow statement, you can get a sense for the position a company is in. Sun Edison would not be able to operate their business without borrowing money. And that just in and of itself increases your risk as an investor. So I think when you're looking at a very promising and kind of a rule-breaking type of industry like solar, like obviously there's a big mass movement just consumer-wise and industry-wise when it comes to renewable energies like solar. You want to size any investment in your portfolio accordingly, especially when it's kind of these earlier stage or just really capital-intensive stage type of companies like SunEdison. And this goes for even a company like SolarCity, which is probably the most widely followed solar company here at the Fool. And as we've seen with the performance of that stock over the past year, it's going to be volatile. And when market sentiment changes for the worse, there isn't a whole lot of a bottom on the stock because there's no earnings. There's a huge amount of debt, no positive cash flow. They're burning through cash as a business. So you just have to recognize that these are riskier companies. Certainly when you're thinking in terms of potential of bankruptcy happening, it's higher with these kind of companies, and the share prices will be more volatile. So, of course, it is kind of company to company. SunEdison, they tend to invest more in solar farms, so kind of closer to like the traditional utility model of generating electricity, whereas you have companies like Vivint Solar and SolarCity, which tend to be focused and concentrated on rooftop solar, which to me actually makes a little more sense, just because you don't have to use any you can use existing real estate to produce solar with the rooftop solar model. You just put it on top of the roof and you're good to go. And Tesla actually also has a dog in this fight as well with the Gigafactory, which we talked about. So as these lithium-ion batteries become more and more affordable and more mass produced, potentially you can even cut out the traditional utilities. You won't even have to kind of plug into the existing utilities as we know them today. You could just have your own, battery pack with your house that can store any excess electricity generated by the solar panels. So SolarCity has mentioned that they think every solar system that they install within the next 8 to 10 years will have a battery pack installed. So that means each house that gets that solar system would have a battery pack. Whether or not SolarCity is able to last as a business until then is another question. Whether or not that actually happens is another one. But that's certainly the direction that some visionary people in this industry see the solar industry heading, whether you're talking about Elon Musk or his cousins, the Rive brothers. So it's a fascinating industry, but definitely tread with caution here. I wouldn't make investments in solar an oversized position in a portfolio. It's going to be a very volatile industry, but on the plus side, even if you just have a small position in some of these companies like SolarCity, a small position is really all you need. If solar takes off, or a company like SolarCity takes off in the way that a lot of us here at the Fool expect it to over a period of 10 plus years, a small position is all you need. You don't need to load up on one of these companies to be rewarded as an investor.
Don't back up the truck on SunEdison.
No. Any company that's burning through cash at this rate, invest a smaller amount.
Before I let you go, earnings season kicks off next week. What is one thing you're going to be watching, whether it's an individual company, an industry, anything, just one thing you're curious to see this earnings season?
Something on a broader level, not specific to any companies, just seeing how companies are performing in 2016, because I noticed with some of the companies I followed, they gave what I consider to be relatively soft guidance for 2016 as a whole. So I'm just curious if we get any more color as to why that is, or if maybe they're sandbagging their estimates a little bit, so trying to maybe exceed those estimates, so setting the bar low so they can exceed the projections. But in general, that's what I'm curious to see, is how companies are performing in 2016 now that we'll have a quarter under our belt, and what they're projecting for the rest of the year. Obviously, each company is going to be different, but as a whole, I noticed that 2016 seemed to have relatively soft guidance. So it'll be interesting to see, whether these first quarter results kind of back that up, or if there's something deviating from that.
I think one difference between right now and a year ago is a year ago you still had some analysts and you still had some companies talking about their forward guidance in terms of the price of oil going back up in a significant way. Mm-hmm. And I don't think you've got anybody doing it. Like, not to say oil doesn't, bump back up. I mean, it's up about maybe 30% or so off of its recent lows. Mm-hmm. It's not to say it doesn't go higher, but I don't think you've got anyone baking that into their guidance right now.
Yeah, you don't want to count on that. And if a company is, you probably want to take that with a very big grain of salt.
Yeah. Thanks for being here.
Thank you.
As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. So don't buy or sell stocks based solely on what you hear. That's going to do it for this edition of Market Foolery. The show is mixed by Dan Boyd. I'm Chris Hill. Thanks for listening. We'll see you tomorrow.